Jamie, thank you so much for doing this. I'll tell you and I'll tell the group, we did a survey of Fortune 500 CEOs earlier this year, and we said, who other than yourself do you most admire? What CEO do you most admire? You tied for first place.
Oh.
Why do you think that is?
I have no idea.
Well,
I don't know who you asked.
You can guess.
I didn't fill out the survey myself, so.
Well, you shouldn't say that.
Yeah, I don't know.
Well, look, arguably one reason, you don't have any idea why people would say that.
I don't.
Arguably, one reason would be survival. I mean, if you go back to before the financial crisis, all the other CEOs of big banks around the world, with a couple of exceptions, John Stumpf was here Monday,
right,
are gone.
Right.
So how do you account for that?
Well, I hope, first I welcome everybody, and I hope that, JP Morgan, we've tried, not just before the crisis, during the crisis, after the crisis, to serve our clients, serve our communities, renew loans around the world, by the way. So we operate in over 100 countries. And all the banks, Wells Fargo did the same thing, and try to deal with the issues while serving the client. Obviously, there are a lot of political, legal, regulatory issues, but we're also making sure we're trying to serve the consumer client, the digital client, the small business client, the middle market client in 2,000 hamlets around the world. And that's where you earn your trust and respect. And our clients are quite, if you actually survey our clients, customer sat's never been higher.
Is that right?
Never been higher. And, and I remind people that JP Morgan, we were a port of safety in the storm. We did not need TARP money. We bought Bear Stearns because we asked to. And we've been punished pretty severely for it since then. So we've always tried to do the right thing, admit our mistakes. Of course, we made plenty, like other people, but we weren't failing.
But you've been hit with, what's the grand total of fines and what, 30, 35 billion? You must know.
A big portion of that is Bear Stearns and Wambo, unfortunately. And so, you can argue whether we should have or could have. I didn't think we should have, but the government felt otherwise, and so we settled and moved on.
Well, you had the London whale as well.
The London whale is a completely different thing, okay? The London whale, we made a mistake, we confessed it almost immediately, which is we didn't have the proper risk controls around a function somewhere. And I said publicly right from the start, bad strategy, barely vetted, barely reported, barely controlled, guilty. We lost our shareholders' money, no one died, nothing happened, company had a record year, and then we were punished by regulators. And again, the punishment by regulators, there were 5 regulators who punished us, not 1, which is very atypical, and it was, I think, $1.5 billion in total. I don't think we should have paid $1.5 billion of fines. I think that, I think the regulators should have slapped their hand for having inadequate risk controls there, but to charge my shareholder another $1.5 billion. And the other thing is, it's like a speeding ticket. You're not just paying one, you're paying the county, the state. It isn't right. The proportionality of the punishment should fit the problem. And I just think it's become a little blown out of proportion. That's a perfect example of that.
So one of the big issues that came up after the financial crisis was, is it a good idea to have these financial institutions that are so important you can't let them fail? And you and HSBC are now at the top of that list of systemically important institutions. Would you prefer to be off that list? Is there, we live at a time when HP is splitting in two, Alcoa is splitting in two. We had a session on that whole question yesterday. Would it be better to get out of the sights of the regulators and break into a few smaller pieces?
So that's not you're too big to fail list. That's a globally systemic risk. We have to hold more capital. I think banks should be allowed to fail. Okay, and if you look at what they're doing in resolution recovery, it's essential failure. I think for the American public, it should have been called bankruptcy for big dumb banks. Let them fail, fire the board, fire the management, claw back stock, dismantle the company. Do it in a way that doesn't damage the taxpayer or the economy. Could that
have been done?
Yes.
In a way that didn't damage the taxpayer or the economy?
I think that all these things are getting there. First of all, we're never going to fail, but all these things are getting there. That's what they're trying to get done and put in place. Remember, in the old days, the FDIC was able to do that. They did that with the major banks. When the world became global, honestly, they just weren't totally prepared for the size of some of these companies. So regarding the global systemic thing, we're trying to get a little bit smaller, but you got to look at business, and we're not going to fail, and I don't mind holding more capital. You've got to look at business from the standpoint of the customer, not from the standpoint of us. The reason we were a port of safety in the storm, a battleship, a fortress, the Rock of Gibraltar, we were large, diversified, strong. We always had excess capital, excess liquidity. We always stress tested our company, not quite with the diligence we're doing today under the auspices of the Fed, but that is the strength. And then why do we do it? And we've earned good returns all these years. We have actually earned good returns. We're not talking about earning good returns. I've told the world this may be a record year again, I think 3 or 4 of the last 5, and next year, depending what happens, may be a record year, because the client's happy. The branches serve private banks, our private clients, our small business clients, our middle market clients, and our consumer clients.
And you serve them better because you do it all under one umbrella?
Because we can presumably, the reason you're in business is you can offer the client something better, faster, quicker, cheaper. There are more than one model. Our model works if you look at market shares, profitability, growth. We're gaining share in almost every business. We've never had higher customer satisfaction, and so that it works. And our global corporate investment bank is the thing that probably causes the most concern out there. We operate in 100 different countries. That also is a very sound company. Like in Asia last quarter, rocky? Was Asia rocky? I think we had a record quarter. Brazil? How's Brazil doing? Not great. We're doing fine. We're very careful about trying to serve our clients. Remember, those countries are basically corporations and the governments and the sovereign funds and the central banks with products and services they need. We don't force them to buy things, but they do include FX and derivatives and market making and loans and trade finance. And so we're doing a good job for the client. That's why we're there. So when I travel the world, these clients are very happy with J.P. Morgan. They want more of J.P. Morgan. They want more of our capital, more of our brains, more of our capability. They want us to bank more of their institutions. They want more of research. We spend $1 billion in research educating the world about companies and countries. That's what we do. So every company that raises money through us does it voluntarily. Every investor who buys or sells to us does it voluntarily. We don't make them do these kind of things.
Pretty clear you're happy with the model.
Yeah.
Yeah. So talk a little bit about how banking has changed.
And it's worked. So this is not fantasy.
Yeah.
Look at the numbers. It's worked. So you can do your own analysis, and even the guy from Goldman who wrote the thing has said, you're right, it's worked, case closed.
So talk about how.
And by the way, I'd have no problem if it didn't work to look at alternatives. Zero.
Talk about how banking has changed since the crisis. It's a different business.
Yeah. Well, let's talk about what hasn't changed. Okay. The consumer walks in a branch, they open a deposit account, they get a credit card or debit card, they might need a mortgage, they might need investments. That hasn't changed. You want to do a good job. There are a lot more rules and regulations around it. Some are good, some are bureaucratic, but whatever it is. The middle market company, small business, same thing. And the large corporation, they need equity, they need debt, they need derivatives, mostly interest rate swaps and FX, they need trade finance, they need advice around the world. Those things haven't changed. There's been a tremendous amount of change around legal, regulatory, reporting, things like that, which all the banks are really killing themselves.
How many people have you added to your staff to deal with those compliance
I think we said something like 15,000.
15,000.
And that's compliance, regulatory, all these various different things.
Has it made you safer?
Some of it, yeah.
Some of it has.
Yeah, I think, look, when you look at remember, you're talking about thousands of things, so I don't say they're all bad. I say, no, some of actually things you might have done anyway that, I think it makes sense for regulators to always improve. Make a company better every day. Just like I walk in every day, I don't say defend the past. I say make it better going forward, which often means you're changing the past, which is an acknowledgement that maybe what you're doing wasn't perfect. So some of these things, capital, liquidity, transparency, those have all made the system safer.
Would you give a 50% has been helpful?
Yeah.
More than 50%? Less than 50%? Sort of.
Look, I don't know. I mean, and you got to say which ones are really important, which ones aren't. And certain things I don't think are very important. They take up a tremendous amount of time and effort. So so it is
more good than bad.
Honestly, it is what it is. Like the regulators tell me, get over it, Jamie. Just do it, and I say yes, sir. Okay, that's what I do.
So look, another thing that's changed is that we've been in an environment now for 7 years, and it looks like it could go on for some time, of zero interest rates. Never happened before in our history.
Right.
Totally unprecedented. Has to have some unintended consequences. Where do you see this going, and is it going to come back to bite us in some way?
So I think the better way to look at it, America is actually doing quite fine. And we've been growing 2 to 2.5%. We've added 10 million jobs, mostly in the private sector. 142 million people work. 122 million, I think, in the private sector. The consumer's balance sheet's mostly is completely corrected. Companies are in great shape, small, medium, and large. Housing has turned the corner. Household formation is going up. We're doing okay. We all wish we had done better. And I think we would have done better had we had real fiscal reform, immigration reform, like the Senator Senator McCain reform, trade policy, which they're doing, I think will accelerate the economy. Those things will accelerate, make it better. We all know it's got to be better because too many people are still not benefiting from this recovery, which I agree with. So
we'll come back to those,
and also America still has the best hand ever dealt of anyone anywhere, and people should remember that. And I don't say this; I say it unapologetically as an American. I say it around the world. We've got Canada and Mexico as neighbors. Go to China; they're surrounded by people. We have the greatest military barriers ever built in the Atlantic and the Pacific. We've got a great rule of law, low corruption, the best markets, including venture capital. We've got best innovation. We've got huge work ethic, best universities. We got a pretty good hand. Let's just make it work better.
We'll come back. We'll come back to making it work better. But the financial effects of zero interest rates.
Yeah, there will be unintended consequences. We don't know what they are, so I'm not going to guess here. Maybe certain assets are higher than what would have been. Certain rates are lower. But savers, conversely, simple economics says that when you reduce the rate in savings, people consume more, or vice versa. You can make a coherent argument that if you're a saver now, and you're going to retire, you have to save more money to have the same income. So it may have had a reverse. So I think in hindsight, I always say Ben Bernanke Jr. will do a book on this, looking back using big data. There will be unintended consequences. Having said that, I think that what they did, QE1, QE2, all made the economy, America's recovered much better than other folks. The banking system is in much better shape. And going back to normal is a good thing. I think we should go back to normal.
Now.
I'll let the Fed, I don't really care whether it's December or March. I think you're all wasting your time and your breath talking about it all the time. The fact is America's doing fine. Normalization is a good thing. Normalization is not the same as tightening. Okay, it's not the old, banking works differently because of all these rules and regulations, and that we all want normalization. And when the Fed has said when we normalize, it's a good thing, and so you eliminate the extra oomph from all this monetary policy. The unintended consequences may start being large in the small ones. And I think it'll create more certainty when they raise rates, not less certainty.
Another thing that's changed is cyber.
No, but another thing, have you met anyone anywhere around the world ever who says a raise of 25 basis points or 50 basis points is going to kill me? Of course not. But if they said that, your next response should be, you're irresponsible. I mean, this has been so it's more of a psychological thing and kind of a technical monetary policy thing than it is the raw economics of rates going up. It's not.
The psychological component, it seems, would argue for doing what you said you were going to do.
I think so, but again, I'll let the Fed. They have better data. They have to make their own judgments, but I do think it reduces uncertainty.
So the other thing that's changed is cybersecurity. You hired 15,000 people to deal with compliance. You probably hired as many to deal with cybersecurity.
No, but we spend $500 million a year. That number is probably going to triple in 3 or 4 years, double in 3 or 4 years. It's a big deal. It's a big deal for everybody
winning the
out
race?
There. Well, banks and defense companies are quite good at it. But a lot of other people aren't. But it's not just about perimeter control, which is very simplistic. It's about inside the company, changing your passcodes, having who has authority to touch what systems, having tripwires, algorithms that catch any suspicious behavior, monitoring your employees, what they upload, what they download, where they go, what time they enter buildings, looking for suspicious behavior, and we do all those things now. But this is an ongoing battle. This is going to be going on for the rest of our lives. I don't know how it's going to end. The government's got to be involved. Okay, it needs to be part of trade. It needs to be part of how we all handle stuff. If people think it's not going to be serious, it will be really serious. And the stealing of IP is not a minor issue. It's at one point people are going to say, "That's it. We're not doing A, B, and C anymore." So it's a big deal. And remember, it's not just for us. Think of grids, aircraft,
which are probably less well protected than you are.
There are a lot of things out there which aren't protected at all. Okay, and if you don't think your company's been invaded, you're wrong.
So you said in your annual shareholders letter, which I understand you write, I mean, you may be the only person other than Warren Buffett who actually does that exercise every year, but you said Silicon Valley is coming.
Yeah.
What did you mean?
Well, I meant that first of all, I believe in competition. I believe, we're great users of technology. We have for years. We already bank 20 million people on this. You can move FX in this. You're going to be able to do interest rate swaps, and you can do investment. You can do so many things. So we're a huge user. We do our own cloud. We've got our own virtual reality, not virtual, but virtual controls how people can access our systems. But you're going to have competition. So Silicon Valley, obviously you'll read about fintech. And my view is simple. Some we'll compete with, some we'll collaborate with, some we think we do a better job. We're not falling down flat. I'm not terrified, but we study everything. I've been doing this my whole life. There is nothing that people don't do that we study from top to bottom in a very detailed level. Like including, how many of you, when you Google, Apple, Amazon, Venmo, Mint, all these things, push that thing and say, I agree? You all do.
After carefully reading.
Yeah, you all do, and none of you read this, Dave. Well, we had people go through all those contracts, top to bottom, okay? All of them. How that information is being shared, what rights they have, when aggregators, Yodlee, screen scrapes, and then what they do with that information, okay? And a lot of this information is widely marketed and widely used, and your dog's name, and your house name, and your second car name, and where you go, and how you go, and what you buy, when you go to sleep, where you stay up, what hotels you go to, what restaurants you go to, and probably even who you're with half the time. That's a lot of stuff out there, folks. And so to me, we get very diligent in trying to do the right thing for our clients, and protect ourselves and protect our clients.
But there are some things about banking that still seem awfully backward in this world of technology. I mean, I refinanced my house last year, and it wasn't your bank, so but it took 5 months. I mean, they should be able to, in the world of big data, you ought to be able to figure out if I'm creditworthy in about 2 minutes.
We might have.
Howard, I'm going to quote you the next time I need to refinance.
We can figure out whether you're creditworthy within 2 minutes generally. A mortgage is different. There are thousands of federal, state, and local requirements about mortgages, documentation about appraisals, about your incomes. There are tons of forms. It's different everywhere.
Regulation.
It is a lot. We're trying to do it right. It is a lot of stuff, and it's causing slowdowns. But we have to do it right. And when we don't do it right, look at how we get punished.
Get another fine.
Yeah. So it is. Some people do a much better job. We unfortunately in this case did have antiquated systems. One of the mistakes I made, buying Bear Stearns and WAMU, which are huge in the mortgage business, and Chase in 2008, all three had bad mortgage systems. So we had to deal with 3 bad mortgage systems in 2009 and 2010, and we're consolidating them, but it's taken a while. And so it will be automated much more. It'll get much better. It'll become simpler. There'll be utilities that make some of those things work better. We just haven't gotten around to that.
You said you're researching
Remember,
everything.
a lot of banks are cutting way back in mortgage.
You don't really need me out here, do you?
No.
You said you're researching everything. Can you how about the blockchain? We had a whole session this morning on Bitcoin, the blockchain, where it's going, what it could mean to payment systems. What do you see there?
Separate currency from blockchain.
Okay.
Currency. My belief is there's not going to be virtual currencies. They may be small. What's the first thing the government does when it forms itself?
Prints money.
It creates a currency.
Yeah.
Why do governments create a currency? Come on.
It's a trick question.
They like to control it. They have central banks. They like to control the supply. They also generally like to know where it is, where it goes, who's got it. It's called AML, BSA, and stuff like that. So, what? It's a little fun. Now you have a lot of politicians around those. So there's a need. I support technology. They will not support major currencies that go around borders that don't have the same controls on it.
Not going to happen.
It's just not going to happen.
Okay.
It may be small. And then
okay,
I think Bitcoin is like $2 billion or $3 billion. We move $6 trillion a day. Okay, so you got to put it. So the second is the blockchain is a technology. Like any other technology, if it's cheaper, effective, it works, it's secure, then we're all going to use it.
Is it?
We don't know. We're part of it. We're studying it, and some people think so and some don't. The security part's a big deal to me. So if you said put certain documents out there and certain ownership and make it, that's all fine. Remember, it already gets done. It already gets done in various different things, privately, which some of you want privately. And the question is it better, cheaper, and more secure? If it is, people use the blockchain. I don't consider it that mystical to use a different technology to do something if it works.
But you're spending a lot of time looking into it.
We have a study group looking at it, which I think most of the banks do at this point.
Yeah. So
and by the way, it may be very good for certain things like loans, a lot of documentation, hard to transfer. Yep. It takes us still 20 days to settle a loan, a lot of paperwork. But it may not be as important for something that already has all electronification like equities. So you will see over time what it actually makes sense for. And
where it plays out.
Where it plays out.
So we've spent the last 3 days talking about a series of topics that cut across industries. One is the rapid pace of technological change and the disruption that causes. John Chambers sat in this chair and told the audience that 40% of their companies would be gone in 10 years. Then we talked a lot about culture and the importance of human systems that can both withstand those hurricane force changes and adapt to them. And we talked a lot about the changing role of leadership in getting to the destination in that disruptive environment. How do you think about those things?
Yeah, so first I think it's true that technology is faster and faster and faster. Technology is the thing that's changed the world, starting from agriculture, the domestication of animals, printing the Bible, the steam engine. So technology has always been the main driver of what changes in society. And it's more true today. It's moving faster. The accumulation of data, the speed, it's a good thing in general because it enhances mankind. What people can get done and how they can accomplish. Like even in agriculture, they've been talking for years there'll be no improvement in agriculture. It still had 1 or 2% productivity improvement year after year after year. These new technology, they can water and fertilize by square yard. Which can, so all these wonderful things it has, and yes, you've got to be completely prepared for it, and so all companies need really diligent people from, in tech and ops, and it's not always tech and ops, by the way, it's the use of tech and ops. So very often you need sales and marketing.
That's a strategy decision, right?
Absolutely. So, so some of these players in Silicon Valley, what they're great at is it's not the technical, they do that well, it's also the kind of front to back, reducing the pain points, making it faster, getting it online. Whereas I say banks, we sometimes perfect creating pain points. We want to see if you can get through them. So we could do a certain thing literally in 2 minutes, but it may take 15 days to close the loan. Or you have to sign 4 documents when one would have been sufficient. So
how do you get your people to say, you know what, we don't want you to make people sign 4 documents, we want to do it?
We are, like I said, we're diligent. We study everybody else. We know what they're doing. We're changing our systems. We're doing things faster. And we've been doing that our whole lives.
And how about forcing that change down into the
so if you came to JP Morgan, you went to any business, and you asked, you can get a list of all those projects, timelines, dates, and the buy-in of all the people. Straight through processing, get it online. And like I said, #1 mobile website, or at least the last time I saw it was ranked #1. You can deposit checks, you can move money. We're building a system to allow people to move money real time, not just between Chase, but between Chase and the banks. We're building all the things that customers can want.
Is that part of the Chase payment announcement that you?
It wasn't part of the Chase Pay announcement, but it will eventually be embedded in Chase Pay. So,
can any bank, given that you have competition, this payments? It's a land grab, basically. Somebody's trying to get to mobile payments first. Can a bank do that, given that people want something that works across institutions, across platforms?
Yeah, because first of all, we want, if you're a customer of ours, that you can take your phone out and you can click on Apple Pay if you want, or Chase Pay if you want, or inside a store app, they may offer Chase Pay. So you can use your card, your debit, your bank account in the way you want, in the way it's friendly to you, that you can use rewards you want, and you can use the same thing to move money P2P. And so, and we want you to be able to do it, by the way, not just on mobile, but online and in the store. So we're just trying to build these things that are great for customers, that make it easy for customers, and banks, some of the bank systems out there, particularly one called ACH, is antiquated. I have a real problem with ACH, and I think it's creates the biggest gap for the fintech guys out there is to go after that. It's slow, it's antiquated, it doesn't have enough controls in it, and so. But I would spend $1 billion to build my own system if I had to. So I think the banks, we need faster, better payments that are used by people out there, and we're going to come up with things that make it much easier. So you can do it among all banks, as opposed to just one bank.
I want to open it up for questions, but one, I want to ask you. First, a question about politics, because you've already expressed your frustration about lack of fiscal reform, lack of immigration reform, lack of sufficient progress on the trade front. What do you think it's going to take to get a functioning government in Washington?
Look, what I was saying is that we have a great hand, but we have these issues that you just raised. I think they're important. And had we gotten a lot of them done, I think we'd be growing a lot faster. And it would be attacking that wage inequality problem, it would create more wealth so you can come up with better programs, you can better educate our inner city school kids. And I think it's important for society. I wish, this is not up to me, there would be more collaboration. I think the scapegoating, finger pointing, making fun of people, that's not the way I want to live. I don't think it leads to productive outcomes. So if you said wage inequality, I'd say I agree it's a problem. Talk about how you fix it. I'd say grow the economy faster. I think raising minimum wages is fine. I think it should be kind of state by state so you don't cause problems. I think a better earned income tax credit, I read this from Warren Buffett, so that people are better incented, they're actually paid to work, because work's a good thing, so we can redesign that. And I think education, and not education, the point of education is to give kids opportunities so when they get out, I'm talking about high school here, they can both get a job, so locally they get a certificate that means something, and or go on to college, or do both. And that in inner cities, not generally, a lot of you went to high schools where it wasn't a problem, in colleges it wasn't a problem, but in inner city school, high school, 50% of the kids don't graduate. So providing opportunity to Americans is an important part, and the sad part is there may be a Steve Jobs or Barack Obama in that group, and we'll never know. We didn't give them that opportunity. And it's a shame for America to allow this to go on. And I honestly say, why aren't we ringing the alarm bell? Why is this so? If it was at a company, I'd be banging an alarm. We'd be meeting at 7 o'clock every morning, 7 days a week, until we got it fixed.
Well, in some ways we are ringing. In some ways we are ringing. That's what Donald Trump and Bernie Sanders are about.
I'm talking about education.
Education.
No, but
more broadly, we are ringing the alarm bell. People are saying we're fed up with this, and so they're going to extreme solutions.
No, what people should say is it is a problem. Let's get the people in a room that can come up with real solutions.
Who's
going
to do that? Who in the current political, who do you see out there on the, you've been involved in politics, watched politics for a long time.
You guys do quite a good job.
You've done it in the past.
You guys do enough of a job commenting in politics. I'll leave it to you.
You've never been shy about commenting on politics.
Some politicians have tried. I mean, Schumer and McCain had an immigration bill, which I think was voted on by the Senate.
Yep.
It's a great bill. The trade thing was, I think, a thing of people working together, which will be a very good thing for America. And these other things, they may have to wait or not. We'll see. I just don't know.
You don't have a candidate? You don't have a candidate at this point?
No.
You will at some point?
I might.
Questions? Comments? Nina.
Hi, Nina Easton with Fortune. So, Jamie, just to follow up on the politics, populist sentiment, as we know, is rabid in this country. It's really sort of a modern times high. And in the crosshairs is CEO pay and Wall Street banks. If you were sitting there with Bernie Sanders, what would you say to him?
I'm not going to comment on any individual candidate, no matter how many times you ask me. Look, I completely understand that after the crisis, that the American public saw a problem, they suffered, and generally they looked at two culprits, Washington and Wall Street, in general. It wasn't specifically true. Not everyone in Washington, everyone in Wall Street. J.P. Morgan didn't need TARP. But when the banks got bailed out and CEOs walked away with a lot of companies, it offended me too, just so you know. Okay, so I understand the anger. The only thing I can do is do the best I can for my clients. Every community, every school, every hospital, every consumer, every corporation, every government, we bank tons of governments around the world, we're satisfying them. And that one day we, and maybe the industry will earn back more of its respect, but that's all we can do. Our products and services are necessary and required. If people have concerns about the issues with them, then we should deal with those concerns, specifically. It doesn't have to be generic.
Well, Nina raised one, which is pay, which is a big part of the public conversation.
To me, that's more populist rhetoric than a solution.
Do you have any thoughts on what it's not? And it's really gone beyond banking. There are numerous polls that show in this country certainly trust in business is.
Well, trust in media.
Trust in media is pretty low too.
Trust in the church.
You think it's trust in
trust in the government, trust in police, and I'm not going to blame anyone here, but we've denigrated just about everybody there is out there. So trust in everyone's down here. And so that's not justifying. Stop scapegoating and finger pointing and having simplistic arguments that just aren't true. The world's not binary. It's not a zero-sum game, and there are solutions to every single problem. And and we could talk about specific solutions, but that's what we should be focusing on. And
why don't you run for office?
I'm not suited for office.
Why?
And by the way,
why aren't you suited for office?
Because I'm not. Look at me.
Questions? Right here.
So we had this whole discussion today about bitcoins and digital currencies and so on. How do you see when there becomes a shadow system where you have, like you said before, and I totally agree with your assessment, that the governments would try to stop the currency being a Bitcoin currency, but be a technology. But there would be entrepreneurs who would kind of run a shadow economy system based on Bitcoin. So how would you see that play out?
It's just not going to happen. I mean, you're wasting your time.
So you think they're
When
going
the
to
DOJ calls someone up and says that's an illegal currency and it's against the laws of the United States of land, if you do it again, we'll put you in jail, it's over.
So you really
There's no issue. There will be, and this is my personal opinion, there will be no real non-controlled currency in the world. There's no government that's going to put up with it for long.
Anybody?
It's kind of cute now. You know, a lot of the senators in Congress will say, I support Silicon Valley innovation. There will be no currency that gets around government controls.
Anybody here want to take an opposite view?
The technology will be used. It may even be used to transport currency, but it will be U.S. dollars.
But digital,
right.
but the right digital currency will be stopped.
Yes, a virtual currency where it's called a Bitcoin as opposed to a U.S. dollar. These things may be very well for cheap transfers of money.
Anyone on that topic? Other topics? Right here, please.
What do you think about the euro currency? The historians have found out that all currency unions since the Middle Age have failed where there was no unified government over it. And now in Europe, we make the experiment now to have a currency which is not, there's no central government and no perspective that the local governments will give up their authorities. How do you see the future?
So let me put this one in perspective, because when Europe got together to form the Eurozone, I think it was probably one of the greatest accomplishments of mankind ever. It was an amazing thing that all those countries, after centuries of war, not just World War II and World War I, but Napoleonic Wars, Franco-Prussian Wars, 100 Years of War, War of the Roses, 30-year war, got together, and you think you can hold hands and say, can we learn to live in peace? So that part is really good. Having a common market, one big common market like the United States has, is a very good objective, and those two things still exist. The currency, and you know, when you read history, I wasn't there, who people pushed it all the time, the currency was an effort to make it irreversible. Some people wrote about it being a negative, it's never worked, like Milton Friedman, et cetera, and maybe in hindsight the currency was a negative. There is no going back. That isn't a disaster. And I think that the politicians in Europe are making a devoted effort to make this thing work. And by the way, the right thing to do is try to make it work and maybe build in mechanisms that someone can leave if they don't get on board. And you're right, they have to have some kind of, that's why they have central bank, the ECB and the single resolution mechanism for banks, and so they do have to put some cross-European controls in place, which make it hard for the governments. So it is really hard, I'm not denying that. It does create risk, I'm not denying that. They really don't have a choice. A breakup of the euro today, in my opinion, will cause a depression. So you can talk about all you want, it's a bad idea.
Jamie, last question. The people in this audience are dealing with a lot of the same forces and changes that you're dealing with. You may get a stronger dose of it than they do. What's one overarching piece of advice you would give them?
You know, don't be so damn depressed. I mean, you know, America's doing better. We got a lot of things to fix. The world will grow a lot in the next 10, 20, or 30 years. There's an overreaction to short-term things all the time now. Everyone's becoming risk experts in 2009. I mean, wherever you go, the black swans, man, they're everywhere. We're scared of our own shadow at this point. Move on. The world will be fine. Let's have good, smart politics, and the world will be twice as big in 15 years and twice as big again.
Great.
And we're going to lift another 2 or 3 billion people out of poverty.